All right, guys. So I'm going to talk to you about oh man, this thing is about. I'm sorry for turning, but y'all should be about 4 or 5 pips in profit. Go ahead and throw your stop loss in profit. Put your stop loss in profit. If you don't know how to do that, you can close out. Well, now it just dropped back to entry. Well, we was up about 5 pips right now, a few seconds ago. All right. So anytime you're doing anything in life, you need to have goals. I'm a strong believer in setting your goals and following it. You know, a goal without plans is just a dream. So basically, if your goal is to make X amount of dollars or to do anything in life, and you just say, okay, that's my goal, and you have no follow through, no action behind it, then technically you're just dreaming. But if you say, hey, you know, my goal is to make $1 million or to do whatever, and then you say, well, you know, my plans is X, Y, and Z to get there, then basically you can make that goal a reality. All right. So you always want to have goals in whatever you do. So my strategy, my scalping strategy goals is simple. 5 trades a day with a stop loss in profit minimum at 4 pips, which gives you a 20 pip total for that day. So 20 pips, you know, is pretty strong when you have a nice lot size. All right, or even whatever lot size you're starting off with, as long as you have a plan. If your goal is to finish a 90-day spreadsheet or, you know, make X amount of dollars, you know, your plans should be increasing your lot size to get you there. All right, so the weekly goal is 25 trades with a minimum of 4 pips, which is stop loss and profit. That is a total of 100 pips for the week. 100 pips for the week is a pretty strong week. Just think about that. If you're trading a standard lot size of $1, 100 pips per week is $1,000 extra a week. You know, if you're trading 50 cents, you know, 0.50, 100 pips is basically $500. So this thing gets real when you have small goals that you start off with, but you stick to the plans behind that goal to back it up. Monthly, that's 100 trades minimum with a stop loss and profit with 4 pips. That's a total of 400 pips per month. If you're trading standard lot size the whole month, you're looking at $4,000 a month that you can basically hit. So this thing gets real, and it's exciting when you start to increase this lot size and you basically maximize on increasing your lot size with proper risk management and proper leveraging. I'm looking at that GJ, and y'all should be about 6 pips in profit from my call. So not to stop the trading, but put your stop loss in profit. We're at 143.125. So we started at 143.08. Stop loss and profit could be 143.115. You know, and if it goes down and knocks you out in profit, you still made money. So everybody on this call, if you jumped in that trade, you would have made money. And it haven't even hit your take profit yet. But you made money. You made at least 4 or 5 pips from me just now. All right? The reasons for me scalping, y'all should just be blowing up the chat with ones because of that. All right? The reason for me scalping is quick money. I can go into the market just like we did just now, and I can come out of the market quick. Make my money quick, and I'm done. All right? I also love to do weekly withdrawals. Here's the thing. If you leave your money in there, if it's growing, that's good. But the average human being watching their money grow and don't withdraw, that's not natural. It doesn't happen. So for motivation for myself, I schedule weekly withdrawals in the market. So every week I'm paying myself. I pay myself to get excitement for the next week to go in the market and make money again. I can't have no excitement if I'm not pulling no money, if I'm not paying myself. So it doesn't have to be weekly for you. You just set your plans behind your goal. If your goal is to hit a certain day or hit a X amount of pips before you withdraw, that's fine. But have plans to back up your system. So weekly withdrawals is why I love to scalp, because I'm in and out making money and I'm in and out withdrawing. Fast movement when you're scalping. Like you guys should be happy if you're still in this trade. You all should be happy. But But fast moving, we're in and out, and you can make money any time of the day. And that's what I'm going to show you guys, all right? Find a broker with low spreads. I love FinPro because FinPro has low spreads, low commissions, they reimburse you on their deposits. So with all of that, that's more money in your pockets. All right, so that's my FinPro link. If you guys want to screenshot that, copy and paste it, or take a picture of it, you can go ahead and use FinPro as your broker. But I've been using FinPro, for a while, and they've been treating me pretty good. All right. Find one pair and marry it. Basically, the pair I found and I fell in love with was GBP JPY. The reason I fell in love with it is because it has between 100 to 200 pip daily moves. So either it's moving up 100 to 200 pips in one direction, or it's moving up 100 pip one direction, correcting itself the next way. Every day, the movement is about 100 to 200 pips minimum with the movements. So movements like that, I could go in the market any time of the day and make money. So the reason you want to marry that pair is because every move is making. When it spikes up, you watch it all week long, all month long, all year long. So where it's coming from, where it's going. You can do that basically with understanding one pair. Now you can choose any pair to trade with. This is just what I fell in love with, all right? All right, so here's the thing. Study 2 indicators for confidence. I use between 2 and 4. Now, you can go ahead and screenshot this, take a picture of this. So my first indicator is the Ikimoku Kinko Hayo, AKA the cloud. That means the one glance equilibrium chart. All right, so a few things you want to learn on this chart. This is the first one. This is my main one, and I learned the cloud training from Dr. K. Everybody should know who that is. And I tip my hats off to her every time because she changed my life in learning this trading style in the market. All right. We're 3. So I told you we're going to hit our TP on this call. All right. So here's the thing: the Kinjinsen. I want you to write this down. That's the blue line. That is called the confirmation line. The Tikinson, it's the red line. And I know we're talking elementary or primary school talk with red line and blue line, but it's going to make sense in a few minutes. All right. So the red line, which is the Tikinson, that is the signal line, AKA the money line. So here's a huge tip. Can y'all blow up the chat? TP just hit. Y'all just made 10 pips off of this call. All right, so when the red line crosses the blue line, basically that's a confirmation that it's a buy. Now we go off of more than one confirmation or indicators, but once, all right? When the red line crosses below the blue line, it's an indication or confirmation that it's a sell. All right, so that's the indicator that I use, and then also I use the Bollinger Bands. All right. Leverage is key. How can I go on with this now? Here's the thing. If you could understand how to leverage your account, folks. Now this, I don't know this is passionate when you talk about leveraging. If you could understand how to leverage your account, where you can sustain, I'll tell you guys in here, 200 to 400 pips negative, worst case scenario. But just think about it. If you could sustain 500 to 1,000 pips in the negative, worst case scenario, yeah, some people can't tell you, I guarantee you you'll be profitable, but I can guarantee you that if you following a strategy, I guarantee you that you're going to make money and you're going to be profitable at least 95% or higher of the time with proper risk management and leveraging your accounts right. So this is key. This is key. This means here, if you have, $100 that you're starting off with in trading in the market, and we say you need to be able to sustain 200 to 400 pips, that means you shouldn't be trading no more than 2 cents. And that would be able to cover over 500 pips, because every 10 pips with a 2-cent lot size would be $2. So 100 pips would be $20. So you would be able to sustain almost 500 pips. with a 2-cent lot size trading $100. Now, as you follow your goals and your plans to hit these goals, what's going to happen is you're going to learn how to increase your lot size by making money. So if we was to go off of the goals I sent you in the beginning, you're shooting for 100 pips in the weekly goal. So that means with 100 pips and a 2-cent lot size, you would have made $20 from your initial start of $100. Now your trading account balance is now $120. So now you can increase your lot size to maybe 3 cents the next week. And as you gradually increase, you'll get to the point where your lot size is making some nice figures in your account. All right, but you have to learn how to leverage. All right, so scalping the impulse. I scalp 2 ways, the impulse and the consolidation. Scalping the impulse is going to be 70 to 100 pips. So impulse is going to be consecutive buy candles or consecutive sell candles. No mixture, but 70 to 100 pips on the impulse. So that means that it spiked straight up, straight buy candles, or drop straight down, straight sell candles. For new, if you're practicing this, I would start at 100. And anytime you practice in a strategy or learning something, I recommend you try a demo, backtest it before you go live. All right. So consecutive buy candles, consecutive sell candles on that impulse. Do not have no mixture. So if that impulse went up 50 pips with straight buy candles and it had a little small sell candle in there, and then it ran up some more, that wouldn't be a check mark on my confirmation for impulse on this. All right. Now, once you get into that, once you identify that impulse, you're going to enter on the correction. So if it went straight buy candles, the correction of a buy would be a sell. And then you're going to sell for 10 pips. You're going to sell for 10 pips after you identify 70 to 100 pips on the impulse. If it drops 70 to 100 pips and you identify that, the correction of that is going to be a buy. You're going to buy 10 pips. So on the spike up, you're going to sell 10 pips. On the drop, you're going to buy 10 pips. You're buying, you're basically entering on the correction. I use the 15-minute time frame just because of all the indicators and the indications that I've learned. And I'm just comfortable with it. Most scalpers use the 1 and the 5 minute. I check all time frames just to basically confirm what I'm doing. All right, scalping the consolidation is this next week. This is where you can enter the market any point in time and basically make money. So I call the trade off of that just now, the consolidation. So what you do is you find the lows and the highs. You find the lows and the highs. So that the market is here, you're finding the lows and the highs of where the market is at in the middle of it. All right, and it has to be, 10 to 15 pips in between from the low to the high. You have to have at least 10 to 15 pips. And this is when you enter the direction of the trend. All right, the reason I use 10 pips is it's quick money, and that's what I started with Dr. K. 4 pip stop loss in profit. So you guys had a prime example of putting 4 pips in profit for your stop loss at the beginning of this training. Okay, so once the trade gets at least 4 to 5 pips in profit, you put the pips 4 to 5 pips. You put your stop loss 4 to 5 pips. Now this trade is a risk-free trade, and no matter what the market does, you've made money. If the market knocks you out in profit, you've made money, and you could watch it. If it goes back to the entry point, you can re-enter for it to hit your take profit again, and that's where you can make money multiple times and catch pips off of 1 candle. All right, this is what I tell you. Everything takes practice. It's just like text messaging. In the beginning, when we had smartphones, it took you a while to learn how to text, on the screen. But after a while, you was able to do this thing text pretty fast. So if you can modify your trades on your cell phone pretty fast, and you're in profit, and you see, and I call stop loss in profit, guess what? Go ahead and close the trade. You made money. Wait for the next call. As long as you're making money in the market, no matter what it is, if it's 5 cents or $5 or $500, as long as you're making money, that's all that matters. All right. Now here's the thing: If you're using a computer, now 100% of my trades are on my cell phone. But if you're using a computer, there's a way that you can actually trail the stop loss and just slide it up and basically slide the stop loss right behind the market as it goes. Or you can actually, submit a trailing stop loss. So, but I use a phone, so you have to be able to modify pretty fast. Do we have any questions so far before I go into trading view?
Hey, David, how are you? I really want to look more at consolidation because I'm having a hard time finding it over the last maybe week or so.
Okay, so I'm going to go into the chart for a few seconds. Here's the thing. The market moves three ways. It moves up, it moves down, and it moves sideways. If it's moving sideways, you should be able to identify that consolidation. All right, so I'm going to show you guys in a second, and we'll go off of that. Before I go into to trading view, do you guys have any questions? Anything else?
Yeah, Dave. When you talk about it going up, the on the impulse, it shoots up 70 to 100 pips. Mm-hmm. That's like a spike candle that goes straight up, or it's continuously going up. It
can be it could be a spike candle that went up 70 to 100 pips, or it could be multiple candles. What you're looking for is all the same candles, like all buy candles if it's spiking up, or all if it's dropping, all sell candles. But so it has to be all the same. It doesn't have to be just one candle. It could be a few candles basically on that impulse.
But no sells in between or anything like that. Just
no. If it's spiking up, no sell candles in between. If it's dropping, no buy candles in between. It has to be consecutive, the same type candles.
70 to 100 pips.
70 to 100 pips, correct. And then you enter on the correction.
Oh, no problem. Thank you.
Now, before we go into trading view, did anybody here get in that trade and hit 10 pips, take profit, or made money off of there?
Yes, sir.
All right. Anybody else?
Yes. I didn't hit 10, but I hit my stop loss.
Yes, sir.
Are you upset with hitting stop loss and profit?
Never.
All right. So we made money off of this call, right? So everybody should be a happy camper. Most time people pay for training, so I trained you for free and I made money for you tonight. All right. So let's continue that. Let me go ahead and share my screen. And this strategy can work with any pair. So if you don't love GJ, this is where I put it. So our TP did hit. All right. So when I'm looking at a pair, or I'm looking at GJ, I have 4 indicators I'm working off of. All right. First thing is I'm identifying the trend of the cloud. All right. So the red cloud is basically the sell cloud, sell trend. Blue cloud is a buy. We can go on. Red cloud is sell. Blue cloud is buy. Red cloud is sell. This is more consolidating there. Well, not consolidating, but it's just a flat cloud. Blue cloud is buy. So you guys kind of guess the gist of that, right? Now, before I go on, does everybody have in their trading view or MetaTrader for the cloud? You know how to find that. Is there anybody that don't know how to identify how to plug in the cloud or the settings? If you don't, let me know and I'll show you.
How do you get it on your phone?
On the phone, you would go into F. If you're on the chart, you go to F, and then you should see main indicator. And then
looks different on the phone.
What kind of phone you have? Do you have an iPhone?
I have an iPhone.
Oh boy, Team Android. For that, you will have to go more into settings to change the colors of the cloud. It's different. It's a little different, but there's a way you can get it where you can understand how it looks. What to do is probably hit me up either tonight. I'll be worn out from these 2 trainings. Probably tomorrow sometime. I could do a one-on-one zone with you to help you and show you how to do that.
Oh, no problem.
All right. So everybody else is good. All right, so first thing is finding the trend of the cloud, the direction is going. All right, second thing is the red and the blue line. Let me see why it's not showing. Hold on 1 second, guys. All right. So we talked about the red and the blue line, right? So this is the red line we talked about. This is the blue line we talked about. So I just want to show you guys a few things. Now, this is not the only confirmation we use. All right, but if we go here, you guys see where it crossed right here. The red line crossed below the blue line and it started to go down, but what happened? It dropped, right? Now here, it crossed, but it faked us out. It crossed and then it came right back and crossed again. This was when the market closed and opened. So this was when it closed. This is when it opened. So I wouldn't have even been trading during this time right here. All right, but then when it crossed, it came down here. That was the gap in the market, and it crossed here. It looked like it was going to cross, but it came here and then it basically came down again, and that's where this drop happened. Anytime these lines are horizontal, that's one way. I think somebody's asking about consolidation. It's one way to identify that the market is consolidating. All right, or the candles is about to consolidate. But we're looking at the red line crossing the blue line. So if we go back, let's try to back test this, right? Right here was another cross where the red line crossed above. You guys see it went up. All right, let's see here, cross here below the blue line. You notice it went down. And this, we want to back test. We want to back test. Let's see, it crossed here. And basically it crossed, it went down some. And then it crossed again here. It went up. All right. Are you guys following me? We can do this all day long where we look at this cross. It crossed here, shut up.
Dave, which indicator is that?
This is the Kinginson and the Tekinson that we went over in the beginning on the PowerPoint. The red line and the blue line.
Thank you.
So this here, remember the red line is the money line, the signal line. So we follow in that. All right. So I'm just going back to kind of show you guys what you can look for. So you back testing and you seeing what's happening. It crossed here again, and you see that, bam, it dropped. It crossed here above, it went up. So you can back test this on any pair, and it'll do the same thing. But this is not the only confirmation you're looking at. This is just one of them. Okay? So that's two we went over. We went over the cloud, the trend of the cloud. These are buy trends. This is sell trends. The blue one is the green and the blue is the buy cloud. So we went over that. Then we went over the red line, the Tekinson and the Kinginson, right? Also, when you're looking at the red line, this tells you the direction of the candle. So it tells the story. So for example, if you look over here, you have 13 minutes left on this candle, right? After 13 minutes, this red line is going to spike in the direction. Remember we said the market does three things. It goes up, goes down, or it moves sideways. So right now it's moving sideways. And you see here, the red line is basically moving horizontal. When the next candle comes out, this red line, they're going to move. If it continues to move horizontal, then it's telling you it's still consolidating. If it shoots up, then you would be prepared for a buy. So if it's shooting up and then it crosses this blue line, we would look at the rest of our indicators and make that decision if it's going to go up. Because remember, if it crosses above, it's basically going to be in a buy. All right, so that's two indicators we talked about, the trend of the cloud and then that. All right, also, while we're talking about the cloud, you have to be able to identify dips. dips in the cloud. You have a dip here. You have a dip coming up. You have a dip coming up. Anytime you see a dip, the dip in the cloud basically pulls the candle towards the cloud. So if we went here, you guys see right here, there was a dip. You see a buy candle. There was a dip right here, a buy candle. A dip coming up, so I'm expecting a buy candle to be coming. Then you have a nice little dip coming up here. So this is where I'm expecting this to come back up. If all
David, I have a question.
Go ahead.
So right now we're on the candle right before the dip in the cloud. And does it make sense then to, like, if this candle drops a little bit, would it make sense to enter in a little early because you're anticipating a buy? That way you can have a few more pips, or do you wait until the actual dip in the cloud?
So you can do both. You can do both. So right now, if I was looking at this is what I'm looking at, and this is where my call came from. The market just tried, and then here's the thing: Sundays is kind of, I was kind of gutsy just now because I don't usually trade much on Sundays. Markets just open up. You want to make sure it calms down first.
Yes.
So this is what I'm looking for. We haven't got there, but this is consolidation. What I'm looking at.
Right.
I'm looking at highs and lows. Right. Hold on a second. This is what I'm looking at. Come on. All right. So this is what I'm looking at when I call that trade. We have a few candles in here, and it's basically consolidating. It's been moving sideways since the market opened up. So this is where the market opened up, guys. Came down here, it came up, right? And you can identify this with the Bollinger Band, but after you look at the chart so much, you following one pair, you can identify when it's consolidating. So I'm looking at the high, which will be up here, right?
Right.
I'm looking at the low. Now, a lot of people would look at this and say, well, okay, this is a sell cloud, right?
Right.
But I'm looking at the dips that's coming up.
Correct.
So that's what made me wait for it to get down to its low and enter as a buy, expecting the dips to pull these candles into the cloud.
Okay.
If I didn't see any dips in this cloud, then I would be entering as a sell. I would wait for it to come closest to its high and enter as a sell to go along with the trend of the cloud. But because this huge dip is here, this is where I'm concerned. Does that make sense? So to answer your question, you can wait till it get down, because remember, this candle here isn't finished.
No.
We still have 9 minutes on this candle. So this candle can basically end at a sell candle.
Correct.
So if it comes back down here where we entered a minute ago, then yeah, you darn right, I'm gonna jump back in and get some more pips. I'm gonna catch my 10 pips because I wanted to, it's basically hitting its highs and its lows.
Gotcha.
So my confirmation on that would wait till it comes down. Now, the only reason I would go off of that is because right now the market is it's not doing much, so it's consolidating. But if this signal line was starting to point up, or point down, I would kind of wait for more indicators to check off my list.
Okay.
All right. And here's the thing. The reason I use 4 indicators, I don't care how good of a trader you are or whoever you're following, how good they are. There's no 100% trading strategy. Every trader has lost before. Now, in the last 7 months, I've lost 4 trades, profit over, I think, 400? So, that's pretty strong, but there's nobody that's ran 100%. So if anybody ever give you a strategy and say, hey, you're 100% going to hit this trade, they're a lie. Now, that's where the indicators come from. So the indicators is giving you confidence, is checking off your list. So now here's the thing. If all of my confirmations checked off and the trade does the opposite, then I have to check my strategy. I got to go back and back test my strategy.
Right.
So all it is having confidence in the trade you call and what you've been watching and studying the past couple weeks or months.
Gotcha.
That's all it is. but there's no 100%, accuracy. And that's why you have to leverage correct. Because if you're following a strategy and you leveraging correct, you would be okay. All right.
Yes.
So this is what I'm looking at. I'm looking at the dips. Now, here's the thing. If we go back where it came from, where it broke the cloud, and there's more into the cloud training, so you can wait for if the candle breaks the cloud, you wait for the second candle to finish, and then you enter in that direction. Or if you enter on the 15-minute and that happens, that's between 10 to 30 pips you can catch. If it happens on a larger time frame, you can get more pips out of it. But that's something that a lot of people look for also when the candle breaks the clouds. There's more in depth to it. It's not going to happen over one training. But I'm just giving you the basic indicators that you can look for. All right, so that's two indicators. Three. That's you have the trend, you have the red and the blue line, and then you have the dips in the cloud. My bread and butter is down here on the RSI. The RSI, write this down. If it is above 70, it's basically overbought. So that means if something is overbought, it can possibly go into a sell. So if my RSI is above 70 or way above 70, I'm ready and I'm jumping in a sell, because I know it has to come back down. But I would check with some of my confirmations, my other indicators to make sure, before I enter. If it's below 30, that means it's oversold. So if something is oversold, then it's going to eventually go into a buy. So if I'm looking at this trade right here, my RSI is at 42, right? So it's closer to what? It's closer to 30, being oversold, right? So I'm watching this RSI and going over my indicators and my confirmations to say, okay, I'm looking at the highs and the lows of the consolidation. I see the dips in the cloud. My red and blue line is basically consolidating. My RSI is pretty low, close to being oversold. So if this comes back down to my low, you guys see the candle is now a buy candle with 4 minutes left. If it comes back down into my highs and to my low from my consolidation markup, I'm watching the dips in the cloud here and there. My RSI is low, then I know, hey, I can go jump in a buy and catch me between 4 to 10 pips easily. So here you guys are seeing this candle is coming down. It can possibly finish in a sell candle, but you can jump in when it gets to near your low. When you consolidate, there's no perfect entry point on the consolidation. You just have to be leverage correct. And when it breaks out, we want it to break out in the direction that it's going. All right. Does anybody have any questions? So the 4 indicators is basically the trend of the cloud, the red and the blue line, if they're crossing, where they cross, the dips in the cloud, and the RSI. Let me go and see, do we have any questions in the chat? Let me check the chat. Let's see, Paul, were you keeping up with the chat? Let me see, somebody said, do you, so you just wait for 70 to 100 pips, then you enter the next candle in the opposite way. It doesn't have to be the next candle when you're watching the impulse. The impulse, you just waiting to see 70 to 100 pip movement. You can enter that same candle and hit your take profit on that same candle while you identify it. So that's only on the impulse, all right? Somebody said, how do you put the cloud on Android? You go to F, you go to indicator, and then you click the Ikimoku Kinko Hayo, and then you go ahead and you press done and then save that information. All right. Let's see. Somebody said the red and the blue lines and the cloud indicator mines are all red. Give us a screenshot of the setting of the indicators. I think I just did it, but I'll go ahead and do it 1 second. Let me answer. Let me do that first, and I'll come back to the next question. So I'm sorry. Let's see. go here, go to settings. There you go. You can take a screenshot or picture of the settings of the cloud. And you could use the same settings on your phone also. All right, so that should have answered that question there. Let's go back to the other questions. If you got questions and you're on this call, you can unmute yourself or you can type in the chat. My goal is to make sure you guys understand what I'm looking at. You can pick my brain. All right, let's see. Somebody said, how far ahead is the dip in the cloud from the actual candle? It's in the vicinity. I would say maybe I would say between 1 or 2 candles away. But if I was looking at this here, I see I see 2 dips. I see one here, and then I see one here. And also I see the cloud is getting pretty fat. So when the cloud is getting fat, that's giving it room to basically break through the cloud. That's another thing I look at. But you always want to be leverage correct, because you don't want to get fake out. You don't want to think your indicators go one way and then it comes in the cloud and then drops. It can continue, it can continue to drop. It may do what you're looking at. We have the 2 dips in the cloud here. It may come in some buy candles, and it may have went up, but then it can still drop, because overall this is a sell cloud. But we're still waiting on it to break. If this breaks this cloud, then it's going to shoot up, because we're still watching it from where it came from. All right. So hopefully that answered that question. Let's see. Let's see how far ahead I answer that. How do you? 1 second. How do you determine your take profit? How do you know it's going to take 10 pips? I don't know it's going to take 10 pips. What I know is I want to get 4 pips in profit. The reason I use 10 pips TP is that's what I learned when I started with Dr. K. And 10 pips is kind of like a standard take profit that a lot of people use. But my ultimate goal is not to hit my take profit. My ultimate goal is to basically get 4 to 5 pips in profit, put my stop loss in profit, and then ride that trade up to 10 pips or 20 pips, whatever you want to do. But once you get 10 pips in profit, once you get 4 pips, 5 pips in profit, and you throw that stop loss in profit, it's all game over for you. Like, it's a risk-free trade, and you can just rack up on that. All right. Somebody was about to ask a question. Go ahead. Somebody was they unmute themselves to ask a question. I don't know who it was. You can unmute and ask a question. Okay, no. Let's move.
Yeah. Hey,
Go
David.
ahead.
I was just trying to ask, can you go over the dip between the cloud? Is it the top of the cloud, or is it going to be the bottom line of the cloud?
Okay, so let me go over that, and then I think, who is this, Eunice? I'll start back with your question in the chat. So when we're looking at the dips, we're looking at so right now, everybody can identify that this is basically, it's below the cloud, right? Everybody see that? It is below the cloud. So the dips that we're looking at is going to be underneath the cloud. Like this dip here. You got a dip here. You got a dip there, you got a dip there, you got a dip there. The dip below the cloud. If this trade was above the cloud, right? If it was above the cloud like here, we would be looking at a dip here, which this sell candle lines up with it. Then we have a dip here. Now, over the cloud means there was in a buy, right? That means there was in an uptrend. So this dip here, you have a red cloud that came back down. You had a dip here. You have a red candle that came back down there. This here, it was a big dip. I would have expected to drop further, but we do have 2 red candles here, and then we have another one here. Basically, the red candles, it went down in the sell. It came down some. So that's this big dip here. Then we see another dip here, which was, it happened right here, these 2 red candles. This dip here, we had one before the dip, and then we had one after the dip. So it's in the vicinity. This dip here, you see a red candle there. This dip here, it happened a candle before the dip. You have a red candle here for a dip here. So you just have to identify, but if you're in an uptrend, the dips is going to be above. We're not watching below. All right? hopefully that answers your question. Let me get back into the chat to your niece. I think I pronounced it right. You said once the TP hits on the consolidation, we can re-enter the trade again upon hitting in the EP. If the take profit doesn't, if it doesn't hit your take profit, if the trade doesn't hit your take profit and hit your stop loss in profit and goes back into your entry, that's safe for you to re-enter again because you were anticipating it was going to hit 10 pips. If it hits the take profit and it comes, if you're consolidating and it comes to your high, if it goes back down to your entry, you can, but I would be more confident with my take profit not hitting when I re-enter. All right. Then we have one from California. Let's see. So when you're calling trades, you're actively on the computer watching the market. So it depends on what I'm doing. Most of the time, if I'm at my office, I have it up, TradingView up. I'm go to tradingview.com on my phone. I usually look at TradingView more than MetaTrader 4. I do MetaTrader 4 for my trades when I enter and exit the trade on my phone, but most of the time I'm looking at TradingView because I may have it marked up where I'm watching it over the week or over a couple of days or something like that. But yeah, I use TradingView. You can log into TradingView. It's a free account. It saves everything you use. All right. Prime example of what we going over, folks. You see the dip right here. You see the buy candle was shooting up. Now, this is what I want you to look at. Let me move this chat. This is what I want you to look at. So it started here, right? It ended on this candle here at 143.149. And let's see, it came up to 143.184. That's basically 4 pips. So if you had entered down here, which we didn't confirm. We wanted it to come down more to your lows where majority of the consolidation is happening. And then you could get in, but this dip is basically pulling it towards the cloud. All right. Do you have any other questions in the chat? Let's see. More on the money line and the line crossing each other. Basically, right here, it's consolidating. If the red and blue line is basically horizontal, it's consolidating. This red line tells you the story. If you see it shoots up, that means that that candle is actually going to go in a buy candle. If it shoots down, vice versa in a sell. But all you're doing is watching where it crosses. If the red line crossed below, then it's basically in a sell. This wasn't a cross. This was a fake out here, y'all. Right here is where it crossed below, and basically it came down. This was when market opened. We go back. Right here, it crossed below, the red line crossed below the blue, and it basically came down. Right here, it crossed above the blue, it went up, and you can just back test and practice with this with your demo account. But when it crosses above the blue line, when the red line crosses above the blue line, that's a confirmation for a buy. When it crosses below the blue line, it's a confirmation as a sell. All right, so hopefully I was able to answer that. Okay, this one says, within consolidation, should we only enter the direction of the trend or just the direction of the trend within the highs and lows? You want, 9 times out of 10, you want to enter in the direction of the trend. That's a safe zone for you. Because here's the thing, if you watch Stevenson Lindor training, his strategy is the impulse, the correction, which is the flag, and then the continuation. So, and I know I'm on a lower time frame, that he uses a larger time frame, but the flag is where you have the highs and the lows in the consolidation. So you want to enter the trend of the trade or the direction of the market, the trend of the cloud, to be safe, because the consolidation is the flag, and when it breaks that consolidation, it's going to break in the direction of the trend, right? The only reason I went against the trend right here is because I was looking at the RSI I was looking at the consolidation on my 2 lines, and I see what it was doing. And I know the time of the day, the market is not moving pretty fast right now. So I know with the dips in the cloud coming up, I could have gotten 10 pips from when I called down here with the dips. But 9 times out of 10, you want to enter the direction of the trend with the, there you go, the trend is your friend. The trend is your friend. The only time I trade against the trend is when I'm trading the impulse, because I'm just looking for that 10 pip correction. All right. So hopefully I was able to answer that question for you. Do we have any other questions? You guys see what this dip is doing? I hope you guys are getting value from this. I hope you guys are getting value and you're learning what I'm looking at. You should be asking a million questions trying to pick my brain.
This is fire, David. Thank you.
You're welcome. You're welcome. So here's the thing.
Oh.
We're in the game. When you're scalping, you're in and out the market quick. So at the end of the day, I don't care if my trades don't hit 10 pips. What I care about is getting in profit. If I can get my stop loss in profit, I don't care about nothing else, because I'm following my structure. I'm following my guideline, my plans on my strategy. This strategy have been back test for months. I back test this about 2-3 months while I was learning before I actually start using it and spreading it to everybody. So you have to understand the difference between hitting your take profit, which is good. If your take profit hit, kudos to you, kudos to me. That's real good. You know, the flight landed safe. But I'm watching that stop loss and profit. That's what I want. All right?
David,
Go ahead.
quick question. As you see this this next dip coming, right? So let's just say that pans out, it pulls it back, and then it has a steep drop. So that's what you're talking about in terms of scalping
Not
with
to
the
cut you off
trend?
real quick. Not to cut you off
Yeah.
real quick, but y'all see what this candle is doing, right?
Yes.
It's like it's doing, so it came up. Let me show you guys something. I'm gonna move this consolidation. It's been here and it's been there. That's the difference of about 7 pips, right? And you guys been watching this for about 10 minutes or 9 minutes, and it's just been going up and going down, right? We could have entered here numerous of times and make money from it, because it came up. You could have thrown your stop loss and profit 4 pips. Came back down, knock you out. Drop back to the entry point, you do it again. You see what I'm saying? So I'm sorry, was that Andre? Andre, you was asking the question, or who was that asking?
Yeah,
the
that
question?
was me. That was me. That was me.
You know, I talk to you a lot if I could identify your voice.
Yes. Yes.
Go ahead.
Because I stay in your back pocket. That's why.
There you go. Go ahead.
So with the second dip coming up here, so in terms of the idea of following with the trend, so let's say it pulls it back and it hits it pulls it back into like a buy. Then after that, you see a steep drop. So if you would you enter then as a sell?
Okay, so we will be looking
On the
at
next cloud. On the next cloud. I mean, not the next.
Yeah,
cloud,
you're
next
looking
dip.
over here, right?
Yeah, the next dip. After
So,
that, it kind of drops off kind of steep. So would you, if it's up that high, would you
So-
then go in and sell?
Hey, so here's the thing. It can go that way. It wouldn't surprise me if it does. But anytime I see a fat cloud, it tends to break. It tends to go in the cloud and break it.
Gotcha.
Now, that's something you can back test.
Yes.
But what you said can be true also. Sometimes it would come in, fake you out. The candlestick may come above the cloud and then it'll drop right back down.
Gotcha.
But when I see a fat cloud creating, I'm looking at it to break it. So I see a dip. I see a dip here. I see a dip here. I see a dip here. So if these candles are pulled into this cloud, and this could basically consolidate all night long, into the LBO session, the London session, and then when that London session comes, it could just break through. Like I personally see consolidation all night long until it happens.
Gotcha.
But it can possibly go down. But remember, the cloud is creating from, how does the cloud create? Tell me, how does it create?
It creates off the candles, right?
It creates off of the candles. So if we see a dip here and a dip here, what does that mean? This cloud could potentially turn into a buy cloud, right?
Yes.
So that's something else you have to watch for, because if we end up with a strong pullback into this cloud, and here, these two here, it can actually change into a cloud. So that's something you can actually look for. The name of the game is just being able to identify what you're looking at. You know, before when I first started, I was jumping in trades from swipe trades or Dr. K. You know, I was just entering the trades and didn't know what I was looking at. Once I start to learn what I'm looking at, it makes sense. So when you start to call your own trades, you're looking at certain things. And if you get into a trade and one of your indicators, or it went the other way, you can say, well, hey, this may have been the reason why it went the other way.
Right.
So like it's sharpening your tools on the indicators of why you're getting into a trade. But there is no 100% accuracy. All it is backtesting, and getting in trades that your strategy, and it could be a totally different strategy than this.
Yes. No, that happened earlier this week because I did all the indicators. I had all of them. I entered the trade, and like a minute after I entered the trade, some news came out, and it went from a buy.
And that's something you can't predict. You don't know the news was going to come out. So the news could have come out and just messed the whole system up. And that's why leverage is so important, because even when that happens, your account is leveraged so good that you're good, you're Gucci. You know it's about to come back and follow what you was looking at.
Right.
So another way to be prepared on that is you can go to FX Factory and watch the news that's coming out that day also, to give you more.
There's a lot. There's a lot today and tomorrow and Tuesday, a lot, and it's all
there you
highlighted
go.
as red.
So if you have a lot of news coming out, then I would more or less not try to trade consolidation this week. I would be focusing on what?
Impulse.
Trading impulse. Because if news is coming out, that's where the impulse happens. Okay? Let me get back into this chat. We have a lot of questions. I know Paul is helping me. Go ahead.
On this cloud thing that you're showing us, a better indicator would be if that red line comes up above that blue line, then it will break through that cloud, right?
Yes, that's what you would look for. That would basically, there you go. I like you. That would be, because we're still looking at the RSI pretty low, pretty close to being oversold, because under 30 is oversold, so it's still pretty low. If this red line starts to go and it crosses above this blue line, along with the dips, along with the fat cloud we're looking at, then yes, that would basically be a confirmation that it's going to break this cloud. Good question. I like that. Let me see if we get back in this chat. Paul, if you're with me, you can help me on some of these questions in the chat if I'm missing out. All right. Somebody said, you help me out. I got to buy you some lunch when I see you, man. Let's see. Somebody said which session that we're on. I think the Tokyo session opened up. So I think it will be the Tokyo session that's going on right now. I don't see much movement on the Tokyo. I see more movement on the London breakout session. That carries me into about 11 a.m. Central Standard Time. That's when I see most of my movement, around that time. Let's see. So with consolidation, your goal is 4 pips in profit, not 10. There you go. Paul, you answer that. Thank you. It's 4 pips in profit, and you can ride the trade up to 10 pips. But the goal is to get in profit. Put your stop loss in profit. Okay, Melissa said, I'm noticing every time the lines go below and above the close of the previous candle, it enters profit or negative. Do you take your entry price from there? So when you're scalping, when you scalping, I'm trying to understand this question. I think you're saying when it crosses, you're saying that, can you unmute yourself and ask this question? Because this can mean so many things. Can you unmute yourself, Melissa? Melissa, are you there? Can you unmute yourself for me and ask that question, please? While we're waiting on Melissa to mute herself, let's see. Somebody said, apart from the cloud, which indicators is the most? The RSI is my bread and butter. The RSI is my bread and butter because, you know, like right now it's pretty low. If it drops, you know, below 30, I know it's going to be a strong buy. If it goes above 70, I know it's going to be a strong sell, or it's going to eventually catch up back to that point. So without the cloud, I think that the RSI is pretty strong, or the Bollinger Bands. Now, the reason I didn't put the Bollinger Bands here is because I can identify consolidation from my naked eyes. Let me show you. Let me remove this. Remember, market moves up, down, and sideways. So right now it's moving sideways, right? Even if we were to look here, we saw that was a gap in the market. And you want to wait for some, not, I would say consolidation you want to identify after about, I would say about 4 to 5 candles. So if you see right here would have been a little bit, but you know, it's kind of shaky on consolidating. Market is moving down. Let's see here. Let me find some nice consolidation for you. Right here would have been some nice consolidation, but it was in the clouds, so it would have been risky. You had this zone here and this zone here, but you had a few candles in there. But right here would be sweet consolidation. This is what you call money. So right here would have been, and it doesn't have to be, you want majority of the candles to be hitting your highs and lows. All right, so if we was to look at consolidation, I would have say all of this upwards to here would have been consolidation. You have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, let's say about 30 candles, 25 to 30 candles, straight consolidation. That's all money. Highs up here, lows are down here. All right. All right, so let's see, I answered that. Melissa, I'm still waiting on you to unmute yourself to ask the question.
Melissa doesn't have a microphone, so I answered her privately.
Hello?
Okay,
Oh,
okay.
can you hear
Did
me?
you get it? Is that Melissa?
Yeah, can you hear me?
Yeah.
Yes, loud and clear. Go ahead.
Okay, I had to come on my phone. If you're in trading view right now and you look at the candle, every time it crosses the close of the previous buy candle, it goes into either a negative or it goes into a profit. And I was wondering if that's where you take your entry price from.
No, that don't have that wouldn't have nothing to do with that. That's just how the candles go up and down. You know, because you remember you have a spread. So even if you was to try to do that, every broker has a spread, you know, in the middle. You have, if you look at MT4, you have a red and a blue line, which is the market, and in between there's a spread. So even if that happens, that spread is still not going to cover, you know, what you just said on that. But when you're looking for your entry point, it depends on what you trade. And if you're trading the consolidation, your entry point doesn't have, there's no such thing as a perfect entry point. The only thing is getting, it depends on what you're looking at. So if you trade in consolidation, your entry point in consolidation would be as closest to, if your trend is a buy, you're looking to get in a buy. In consolidation, your entry point is going to be as close as possible as the low. Vice versa. If you're looking to get into a sell, your entry point is going to be as close as possible to your high. Now, here's the thing. The reason there's no perfect entry is because, let's just say, if we're looking at these candles as consolidation, right? Now, we would have put, let's see, I had my mark here. I just want you guys to see. If this is my high, and let's say we're looking at majority, so let's just say this is my low, right? if I was waiting to get into a sell, right? Because we're in a downtrend. You know, I got into buy because of the dips, but I don't see any dips coming no more. So technically, looking at this would be getting into a sell. But then you also want to watch your RSI, right? But let's say I was going to get into a sell, and I was to say so if we looked at a perfect entry on this consolidation, the perfect entry would be right to the tip of your high, right? But if you're sitting there waiting for that perfect entry, guess what? You missed out here, you missed out here, you missed out here, you missed out there. There's no such thing as a perfect entry because you will be missing out on money while you're waiting. It's just really getting in the vicinity of what you're looking for. And then if your account is leveraged correct, then it's game over. But there's no such thing. Even if I was looking to get into a buy, let's see right here. It got in here. This was my low. This was my low that touched my line, right? But this came down, this came down, this came down, this came down. All of these candles came down, but it didn't get to my perfect entry. So the perfect entry would have been right to the tip of my low. So I would have missed out on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I would have missed out on all these candles if I was going into a buy because I was waiting on my perfect entry. So you're just getting in the vicinity. So I would basically give up 3 or 4 because here's the thing. If I was waiting on it, let's say it came here and I said, okay, I'm waiting on this candle to come back down to my line, right?
Mm-hmm.
I missed all of this waiting. Then it came back down here. I missed all of that. Then it came back down. Then I missed all of that. You look at that, this here, that's 12. This is 26. That's 14 pips. We go back to our goals. Our goals daily is what?
4 pips. Mm-hmm.
So we could have gotten 2 or 3 trades from this consolidation and hit our daily goal and go about our business, doing something else.
Okay.
All right. So there's no such thing as a perfect entry. You're just getting in the vicinity. Now, as close, if you can get as close to that perfect entry as possible, then you just eat more pips. All right.
Okay.
All right. Let's see. Where am I on the questions? Let's see. Now the candles are near the high again. Would you look into so who that is trying to get me to call a trade? Kenny, you trying to get me to call a trade?
It's on its way down.
You can watch it, but here's the thing: if we look at it, the reason I wouldn't do it right now, I would have done it watching this dip here. Yeah, we're waiting on this dip and this dip here, but if you look at it, after this candle, we got 1, 2, 3, 4, 5, between 4 and 5 candles. So that means if we get there, you may have to wait almost another hour or so watching it before it can come back up for this dip. But I would wait if it comes back down to like 10 or under, then yeah, I would jump in for a buy. If it drops to 10, right now it's at 14. So if it comes back down to 10, now remember our perfect entry, what we was talking about is at 8 or 7. So I'm just trying to get in the vicinity. That's 2 pips I would risk to basically get into my entry. Does that make sense, everyone? Yes, no, maybe so?
Yes.
Yes.
Yes, David.
Yes.
All right, perfect.
Yes.
Let's see, this other question said, let me get this question before. It said, you said the RSI is your bread and butter, but if it floats, but if it floats in the middle of 70 to 30, would you wait? Yeah, if it's in between 70 and 30, more than likely it's consolidating. I wouldn't. That's more of an indicator. So I wouldn't basically jump in nothing if it's right in the middle. If it's closer to 30 and I'm looking at something, then I'm looking at a buy. Then yeah, I would go into it. But it has to be. You have to be confident in when you get in the trade. So yeah, but the RSI is the bread and butter. You can't really, you'll see the RSI movement a lot on the impulse. Is at 12. So You know, let's see, 12, and let's see the top. The high right here was the high is 26, but it created some more highs at 21. So we wanted it to get to 10, right? That's 3 pips. Let's see, 17 would be right here, right? Y'all just waiting patiently, huh? Okay, we had 13. If it gets to 12, we'll get in. If it drops down to 12, so be ready. If it drops to 12, we'll get in. It's at 13.7, 13.5. While we're waiting, does anybody have any other questions? Nobody has no questions?
So when it drops to 12, you're gonna get in as a buy?
Yeah. And the reason we're getting in as a buy is just because we're looking at these dips in the cloud here.
Okay.
The RSI is at 41, so it's close to 30 for being overbought. It's at 13.4. Let's see, how much minutes on this here? We have 1 minute and 16 seconds. Let's wait. If it goes back up, then we just miss out on that. It's consolidating. We want to be, solid on what we do. It's at 13.1 with 59 seconds. And also, while we're waiting, I want you guys to look at this, the red line. It's probably going to consolidate and go off across again. But I want you to watch the movement of it after 44 seconds. It's at 13.4. And we're trying to get to 17 for 4 pips. 10 pips would be 23. Go ahead and jump in for a buy, everyone. Go ahead and jump in for a buy. So buy at 143.131. You take profit, modify real quick to 143.231. And then our goal is to get what? 3 to 4 pips in profit. So you want to be able to modify it. So everybody, if you got in, you should be in blue right now with 7 seconds. You should be almost at 2 pips in profit. New candle coming out, 3 pips in profit. We had 3 pips in profit, everybody. Get ready to modify. Get ready to modify. You should be blue. Everybody look at the money line, and it's short over consolidation again, horizontal. So 17 would basically be 4 pips in profit. But we got in at 13.1, so you should be in blue. You should already cover your spread if you're using FinPro. Two pips in profit, and we're waiting to get to 17. Now this candle could shoot up real quick, so I would have your modify out. I would have your modify out, and you can actually place that, modify at 17.1, 143.171, and once it crosses there and it gives you the okay to modify, then you just press it, and you're already good. But if it drops, we're looking at it going to probably 8. So we would only be about, we got in at 13, so we would be 5 pips in negative from the consolidation that's being created. All right, I have a child. Stop loss cocked and loaded. Everybody should be in profit still. Once we get the stop loss and profit, I think I'm going to shut down the call because you guys should have made money in the first opening of the call and the close of the call. Now, do we have any other questions while we're waiting? 15.7, we're almost at 3 pips in profit. Now, when I first started scalping, I used 3 pips in profit until I master it, and then I increased it to 4 pips in profit. So right now we at 15.5. You entered at 13.1. So technically we're almost at 3 pips in profit. Once you put that stop loss in profit, fair game, risk-free trade, regardless of what the market does, you made money. It's at 15.9. We're at 3 pips in profit. You guys can put a stop loss at 3 pips, or you can wait for 17, which is on the way. Hello. Y'all making money. Bang, bang. 17.1 is right there. If you want to put your stop loss at 16.1 to secure 3 pips, go ahead and do it right now. If you want to wait for 4 pips, then you can wait for 17.1. If you had put it at 16.1, your stop loss would have hit in profit at 3 pips. But you should be in an overall profit from 13.1. And the reason the market is moving slow, time of the day, and it's consolidating. So the name of the game is not to just be here or be a part of IML to just take trades from persons. You want to know what you're looking at. The reason we got into this trade was because we identified these dips that was out here. So here's the thing, it dropped to 14.9. You still should be in profit from your entry at 13.1. But if you had put your stop loss in profit at 3 pips at 16.1, then you could have really re-entered once it comes down to your entry again. Stop loss and profit, hit already, jump back in. There you go. So 13, so basically you're 2 pips in profit. And that's all it is, folks, when you trade in the consolidation. Ain't nothing to it. You just have to know what you're looking for. Let's look at our RSI. Our RSI is still floating around 40, 41. So we still decent. Trade is moving up. Back at 15.6. I sound like a auction person, you know. But I'm just making sure you guys make money before we go to sleep. Y'all better shout me out tonight on everything you guys help me with. Telegram, social media, you name it. You name it, I'm on it. Okay, there's your chance again to go 3 pips in profit at 16.1, but it's at 16.9 right now. So if you want to secure your trade, type in modify. There you go, 4 pips in profit. 143.171. 4 pips in profit is above there. If it knocks you out, too bad, you made money. Don't be mad about making money. Everybody here should be locked and loaded with their stop loss and profit. And then you just wait it out. If it comes back down and hits you out, you made money. If it continues to go up, it's at 18. It's at 18. Our TP is 23. So 18.1 will be 5. If it knocks you out, do not go right back in. Wait for it to drop back down to the entry before you go back in. It's at 18.1, so that's 5 pips in profit. You gradually move it up. It's at 18.9, so you can put your stop loss at 5 pips in profit. If it goes to 19.1, you just gradually move that stop loss in profit. If it hits you out, don't be mad. Be glad. Smile. You made money. Wait patiently for it to go back down to your entry. If it doesn't go to the entry after it hits you take profit, then that's cool. But you made money. All right? Is there anybody that's still in that trade? Or everybody stop loss hit? We're back at 17.0. So if
Stop loss hit.
My stop loss hit.
Are
Yeah.
you happy with your stop loss hitting?
Yes, yes.
All right, there you go. If it goes back down, it's back at 15. If it goes back down to 13, then guess what? What we gonna do?
Get back in.
Hello. But we're gonna do it until we watch these dips. We want to watch these dips because remember, the only reason I'm in this as a buy right now because I'm looking at this RSI. The lines are really consolidating, so there's no movement in the market going up or down. If there was movement on these 2 lines, the red and the blue line, then technically this is a sell trend. Everybody agree with me on that?
Yes.
So this is that's the only reason I'm not actually doing this as a sell. If this RSI was a little bit higher, and these line, the red line, the signal line was actually moving in a direction where I can tell after every candle, then yes, that's what I would be calling a sell on this. But I'm basically concerned about these 2 dips here, the fatness of this cloud and the RSI. You probably won't see no movement in these 2 lines until LBO opens up or probably later on tonight.
So David, was there a dip where this buy where we just got in at? I
It
don't
wasn't a
see it.
dip where it came in. We were looking at highs and lows.
Okay.
So this was the dip before. This was the dip
Mhm.
we looked at where this buy candle came from, right?
Right.
And then we were looking at highs and lows. So this is the high, this is the low on the consolidation. This sell candle came down. You see, it came down here. And Andre, he notified us that, hey, it's coming down. So we just got in the vicinity. We were waiting on it to get to 10. But that was the reason we got in. So, hey, guess what? It looked like it wanted to come back down. Everybody's stop loss should have hit. Let me see. We have some questions in the chat. But did that answer your question, Shanika?
Yeah. Yes.
All right. So somebody said, Chaz, stop loss hit 5 pips in profit. Wish it was a dollar lot size. Here, if it was a dollar lot size and you hit 5 pips, guess what? That's $50 you just made. And that was less than what? Probably a minute or 2 minutes, right? So that's how you have to look at this stuff. When you start to compound and your lot size start to increase, you can make a killing on this. So look at where we at now. We're at 20. Y'all probably upset with yourself right now, huh? But hey, the market is open 24 hours a day, 5 days a week. Even if our stop loss hit at 5 pips, which was at 17, so basically we missed out on 3 pips. And if our take profit hit, we would have missed out on another 5 pips. I mean, a 5 pip total, but that's okay because we still made money. You can't be greedy. You have to follow your goal, your plans behind your goal. You understand? So yeah, you may look at this and be like, okay, man, I should have waited out. That's not how you want to look at it. You want to look at it like, hey, I'm waiting on my next setup. It's a mental thing. The average person is saying, man, shucks, I'm missing this. And I guarantee you, there is someone on this call that's still in this trade right here waiting for 10 pips to hit.
Hey, David, if this keeps going up, though, and it hits the top end of your consolidation line, would you then enter as a sell because it's a sell cloud?
I would, yeah, I would, but then I would still be cautious of these 2 dips.
Yep.
But
so you would just be looking to get a couple pips real quick and pip and dip.
And there you go. And I'll be out. But I guarantee you, there's somebody that's still in this trade waiting that's on this zone. And you can't look at it that way. I see a lot of people smiling because it's probably y'all, but you cannot do it. If you follow, here's the thing. You have to follow the strategy. You have to follow the strategy. The minute you break away from the strategy, you're going to start losing. So if the strategy is telling you get in profit, put your stop loss in profit, that's what you have to follow. Because here's the thing, once my stop loss hit, I'm not even looking at that trade no more, that particular one I call. So if that trade goes wherever it went or wherever it's going, and you're stuck in there because you didn't get in profit, put that stop loss in profit, then that would be on you. Now, most of the time, I would say probably about 60% of the trades I call, they do come and hit the 10 pip take profit. But what you're risking is you're risking more pips. I can actually get 30 to 40 pips off of one candle while you're sitting waiting on 10 pips. Because you guys just sit and watch this candle go up and down all day long, right? We could have jumped in a couple of times. All right. So I think what that was, 15 pips you guys was able to make off of this call while you learn also. So I know for a fact there was a lot of value on this call. So I'll be waiting to see you guys. Just shout me out on the Telegrams or Facebook, whatever, so we can continue to do this. Let's see. Paul said, could you go over people being in multiple trades at the same time and not considering that? That's a good one, Paul. So here's the thing. Let me go ahead and stop my screen. So I'm gonna stop sharing. I'm not gonna look at this no more. But here's the thing. Everybody try to understand this over leveraging system, right? The most trades you'll see me in is maybe 2 trades. More than likely 70% of the time, I wait out one trade before I get in the next one. Now, when it comes to leveraging your account, if you're leveraging and you get multiple trades, I don't recommend you getting in no more than 2-3 trades max. If you do, your total lot size should be where your account balance is leveraged correct. Does that make sense?
Yes.
So for example, I give you guys the example of $100 and having a 2-cent lot size, right? So if you wanted to get multiple trades, your total lot size shouldn't be no more than 2 cents. So that means you can get in 2 trades at 1 cent a piece. Or just get in 1 trade and wait for that trade to hit. What happens is some people will say, well, I'm leveraged right. I did 2 cent lot size and all this, or whatever your lot size is, and then they got multiple trades going on, and guess what? Your total lot size for all the trades is now having you over leverage. Stick to one strategy, follow one strategy, follow that system, no more than 1 to 2 trades at a time. You guys, you want to win, you want to profit most of the time. If you want to do that, follow that strategy. All right? Let's see, do we have said, how do you set up your stop loss in MetaTrader 4? You just modify your trade, and in your stop loss, you type in your the stop loss at that point in profit.
David, I know we're using the 15-minute charts, and you said you look at the larger picture too. So right now, GJ is oversold on the 1 hour. How does that factor into what we're doing?
So the larger the time frames, the bigger the story it tells. Okay, you can use the same indicators that we went over when you're looking at the larger time frames, and that could give you an idea of where the trade is going to end up. But at the same time, the reason I use the 15 minutes is because that's what works with the cloud for me. That's just because that's what Dr. K, when I went to a training, that's what I learned. And so I'm more or less not brainwashed, but I created a habit where that's where I'm zoned in at. So if I looked at the 1 hour and you said the 1 hour is showing that it's oversold, right? So if it's oversold, that means you would, what is the RSI showing? Under 30?
It was under 30 when I got the alert. I haven't looked lately.
Okay, so if it's under 30 on the hour, I would, you know, if the other indicators that we talked about check off on it, then you can go in there. But keep in mind that the larger the time frame, you know, the candles, it works different. You may get more pips out of it.
It would take longer to play out too, right? Instead of being so fast, like we're in and out, we'd have to actually wait it out a little bit.
You would wait it out a little bit. It's still, the market is still doing the same thing, but you're dealing with large, from what you're looking at, you'll be looking at larger pip counts. You know, like for example, if that candle drops down, you may basically go in a negative more than, you know, what we're looking at the 15-minute. So it just tells the bigger story. But it's good to basically check all of those just to see what you're looking at.
Okay, thank you.
Somebody said that RSI is around 46. So it's pretty close. That's what we were looking at. So it's pretty close to being oversold. Let's see, Jess, the answer I needed. Thanks. I did that 2 times. There you go. So the total leverage needs to be for all of your trades. Okay, so I'm glad I answered that for you. RSI is now showing above 70. It's overbought. What trade are you looking at? Should we wait? What trade are we looking at for?
I think he's looking at the 1 minute, not the 15-minute.
Okay, so if you're looking at the 1 minute, the 1 minute, it works pretty fast. Most scalpers use the 1 minute. Hey, did it hit? RTP would have hit, y'all. Did y'all see it?
Yes.
So if you did stay on there, for the 10 pips, you would have gotten the 10 pips. So take profit did hit. All right. But, you know, we're looking I was looking at my other computer. But we're looking at, if you guys now look at the red line, you notice it's kind of going downward in a way, right? Do you guys see that? It's not really a drop, but
Yes, I see.
it's starting to go down. So now your indicator is kind of is shifting a bit. So our main focus right now is watching that big dip coming up. That's going to tell the story of where this trade is going to go probably for the next couple hours. All right. Can you please show me again the RSI setting? 1 second. Let me share my screen.
Thank you, David.
RSI setting is right here.
David, can you
But how
repeat
you
what
add it?
you
I'm
just
sorry.
said
go ahead.
about the? Okay, the line is going down, but the dip, because you was like you was turning around and going in and out.
Okay, so you see right here, let's take, for example, this straight line here, and this blue line, this being straight for the past since the market opened. When these lines are going horizontal, that means it's consolidating, which we identified as this being consolidating, right? But this new candle just came out, and you see here where it kind of slammed down. You see where it kind of slammed down, right? It tells you the direction of the candle. So, for example, it also hit our high. So if I wanted to get into a quick sell, I could have got into a sell because now this red line is actually slanting down. It's an overall sell trend. I still paying attention to this dip, but now my signal line is telling me what this candle is probably going to do. All right, but it's kind of close to the dip, so I would be careful on that.
David, David,
Go ahead.
is it safe to say, like what you're saying right now on the dip coming downward for a sell on the cloud, it's also consistent with your red line? So we could, I don't know if that's a question, I'm just saying that it's being consistent with the sell up on the cloud before that dip for the buy.
I don't think so. I'm trying to understand it. Go ahead again.
Okay, you see the dip that you're talking about for the buy up on the cloud? There, okay, to your left, you see that little dip coming down? No, not that far left. Right there. So that little dip for sell is consistent with the red line right now. Is that correct?
Yes, because it's not really a dip. It's more or less, it's pointing towards like a push down.
Yeah,
So
and then the red line, yeah, it's
yellow.
consistent.
Yeah. So
Okay.
and then technically we have we still have a sell trend. You guys,
Correct.
I told you what it was about to do, but I didn't want to call it.
Yeah.
But you guys see, it was at its high right here. It was at our high, in the vicinity of our high, and it was right here at 23. It came down so far to 17. So that's 6 pips already. But you know, because I'm wrapping up on the call, I didn't want to call it. And then I'm still looking at these 2 dips. All right. But consolidation is what it's doing. Identify the highs and the lows. This is where you can get in the trade any time of the day and make money off of the consolidation. It's back at 18. We would have been 6 pips in profit.
And what does the thickness of the cloud mean again? Like when it's thick and when it's skinny?
When it's back testing, from my experience, when I start to see it turn fat, it usually breaks through it. Now that's sometimes it don't, because the cloud is basically, it's created from the candle. So if we have a huge impulse, it can be real too. So, but that's just my experience. Like for example, you see here, this was a thickness where it was fat, and this where it kind of, we're coming through the breakthrough, but it basically faked us out here. It did break it right here. And then basically came back down and it broke it here. So that's just on my experience, what I usually identify when it breaks it. All right, you see here, it's more thick when it breaks the cloud. There's very few times where I see it break it where it's thin. You guys follow me?
Okay. And when, like, if it breaks out you wait for like the second candle to
The
second
second
candle
candle
to
to
finish
see
out of the
the
breakout.
same direction of the breakout. Yeah.
Okay.
And you could probably catch yourself a quick 10 pips off of that. All right.
You're waiting for the second candle to complete itself in the same direction, right?
Correct. Let's see. We have.
And that's before you enter into the trade.
Yeah.
Okay.
All right. Let's see. I got two more questions. Will you be giving out any trades before the holiday set? Market is kind of, man. I don't know. I think, a lot of people have been asking me this because, a lot of people want to do Christmas shopping and try to make money to do that. It's kind of, this is my first Christmas going into the market. I had a goal that I basically was shooting for that I personally, was able to accomplish within this last month and, a couple weeks. The only way I think I would call trades really, and the only reason I call these trades tonight is because it was a clear sign to me. It has to be 110% clear to me, or more than likely the impulse. So I have never traded during Christmas time. I have no clue what the market does around that time. I'm just going off of what people say. So I'm thinking it may be slow. So it just depends. But I want to make sure I send a clear signal across for you to make money, before, the season. So, but I will continue, to call trades if I see, a clear signal, because I know there's folks that are still trying to make money. All right, let's see. I'm taking this and turning this into thousands. There you go. All right, guys. So I think that is it for the night. If you guys gain value and money, I can say that tonight. Value and money. Go ahead and shout me out. Everybody who took the trades with me tonight. And just think about it. I call trades where the market is basically dead. A swing trader would look at this and be like, I can't find a setup. But we actually can go in here and find trades any time of the day. So if you got value, most of my trades, the strategy following up is going to be in Mr. GJ Pip walk-in Telegram. So if you're not in there, you can go ahead and go in there. You can look at my Facebook or in the Telegrams and get the link, or personally send me a message for the link. Also, go ahead. You can shout me out in Legacy Telegram or Facebook if you got some value or you made some money tonight. Other than that, I'm glad you guys stick with me, man. This is the longest training I had, bro. We started 30, about to be almost 2 hours, but this one was more valuable. We was able to make money on this one. All right, do we have anything else before we call it a night?
Hey, that news is supposed to come out at 4:30 a.m. and it's supposed to be big today and tomorrow.
So look for the impulse around the LBO session, London breakout session, all right? All right, guys, that's it for me tonight. Make sure you shout me out. I know your names. I'm good at looking, so I know who all was on my training. So if you don't shout me out, you come with questions next time, I'm going to ignore you. I know everybody's name on this call. Y'all better blow up the chats and blow up Facebook.
Thank you so much, David.
Here's the thing. You got to have fun when you're trading, because if you don't have fun, you will lose your mind watching this trade, these charts. You got to have fun while you're making money. That takes your emotions away from it, and you tend to profit more when you're not stressed out about a trade. Because when you're stressed out about a particular trade you're in, you start to chase the trade. And when you're chasing this money, you lose more money chasing it. So you have to have fun. That's why I can go in the chat and I can say, hey, y'all make some noise or wake up, and then I can call a trade that hits. Because I'm confident in my strategy. I know what I'm looking for, and it works. You look at 400 and probably 20-something or 30-something profitable trades in 6 months and 4 losses. That is unheard of with scalping. So you have to be confident in it, but I have fun. So I know who's on here. I know I see JR, I see Dennis, I see Shamika, Linda. I go on all day with the names. So I'm going to be looking for y'all to shout me out. All right, Melissa, Jill, all of y'all, Christy, I'm going to call it out. All right, y'all have a good night. I'll see y'all. I'll try to do more trainings throughout the week also. at least, at least 1 or 2 trainings throughout the week so you guys can continuously, look at the strategy. All right. So you guys have a great night. I think we're done.
Thank you, David.
Thanks, David.
Thanks, David.
Appreciate it, David. Appreciate it, bro.
You're
Thank you,
welcome.
David.